Thank you, Mr Speaker.
I call Alistair Scott.
Thank you, Mr Speaker, for this opportunity to speak on this bill, and I rise in support of this bill. Just to clarify a couple of things that were mentioned by Mr Lees-Galloway for his benefit. The state does not manage the Superannuation Fund. Never has, and I hope never will. The independence of this fund is paramount to the success of the fund. 29 billion is a significant fund. It is well set up, and we do not want even the slightest thought that Mr Lees-Galloway or Mr Robertson would participate in the decision-making of the investments of that fund. We already heard that Mr Robertson wanted to invest more into the New Zealand Stock Exchange or the New Zealand market. He even specified that he wanted to invest in small businesses. This is not doing a service to the New Zealand taxpayer. This is not doing a service to even those small businesses that he would like to support. Because we know that many small businesses fail, and all he's asking is for the taxpayer to invest in a lot of failed businesses. It's just a statistic. We also know that overweighting an investment in any particular index increases the risk of the fund overall. We heard from Mr Bailey that 15% of the fund is invested in New Zealand, and obviously that is significantly higher than the weighting of the New Zealand share market across the global equity markets. So already we are supporting the New Zealand market by providing liquidity in that market. Now, getting to the point of the bill, sir, it's very important that we do manage the administrative side of this fund efficiently. A small percentage difference will make a significant difference to the return of the fund. Mr Ross, my colleague Mr Ross, suggested that there had been $30 million of opportunity lost because of the lack of this flexibility that the Guardians are requesting. So this flexibility will allow the Guardians to do some actions which they, to date, have not been able to participate in. For example, they will be able to negotiate fee structures. They'll be able to accumulate their investments, approach an investment manager, and negotiate hard for reduced fees. The location of the entity, the FIV, is relevant because, again, that is they'd be setting it up potentially in a different jurisdiction, a different location, to reduce costs. And of course, if you've got an entity, an FIV, you're able to limit the liability of that entity to the assets of that entity rather than without the recourse to the super fund, which potentially would be the case in some instances. Now, this is restricted to passive investment opportunities, for example, farms, forests, or a financial instrument that is not a business. And again, the opportunity to save $30 million is there for the taxpayer to take advantage from, because we know $30 million after 10 years will be $60 million. In fact, it'll take less than 10 years at the current rates of return of the fund. So, Mr Speaker, I'd also like to turn to the New Zealand First support of this bill, which I appreciate, but I wonder if that member can see the irony in the support when the fund is mostly invested offshore. In other words, this fund is a foreign investor in other people's lands. And of course, that's exactly the policy that party oppose for this country. They do not wish to see foreign investment in New Zealand, yet they support the Superannuation Fund, which does exactly just that. It invests in other countries' jurisdictions, in other countries' equity markets, in other countries' financial markets. You're not saying they're confused, though. So I think Minister, I think they are confused. And I'd be interested, and to perhaps they may revise, I'd be interested to hear from the next speaker whether they really do support this fund, which does invest in foreign shores. Now, of course, the FIVs are not going to change the restrictions that are already on the fund, which restricts the investment to less than a controlling interest. And that's a good thing, because that forces the fund to diversify, to not interfere, because it is a big fund, and diversification is important. Without the diversification, we don't get the spread of risk. And again, I come back to the point made by Mr. Robertson, where he wants to overweight this fund in what I would, in the New Zealand market, overweight their investment into small businesses. Now, the risk is, of course, that any index that one overweights themselves in loses money. I mean, even the New Zealand market over the last 20 years, we've seen the likes of Telecom, we've seen the likes of Briley's completely disappear off the share market. So, you know, imagine if that was the case, if Mr. Robertson had been in charge of that fund, invested in those companies because of his interest in that particular interest, for whatever reason, political or otherwise, would be a disaster. I would suggest, of course I have respect for Mr. Robertson's political ability, but I would not want him to manage my, not even a, well, so I'm giving him some credit, but for investing my money, the taxpayers' money, I would give him no credit whatsoever. Why would you want to give a penny to a politician of any sort? And of course, coming to the Greens argument, Mr. Norman's suggestion again, trying to pick winners or trying to restrict the fund is a dangerous thing, because we would only have Mr. Norman invest in forestry, I would assume, and certainly not any oil exploration, certainly not in anything that involved anything to do with carbon fuel, or anything that might make a dollar for and on behalf of the New Zealand taxpayer. So it's really important that we do not restrict the guardians of this super fund. It's important that we give them the flexibility to independently invest, given the level of expertise. I mean, do we know? I mean, we know that diversification across currencies, across indexes, across financial instruments is important, because that manages the risk. And we've seen the Portuguese bank, or is it Spanish bank, that where the fund is having trouble with, and that's exactly why you need to diversify. Because although that is potentially an ugly end investment, we know that it's only a very, very, very small portion of the fund. And if we allow Mr. Norman and Mr. Robertson to get together and invest in the things that they like, they will overinvest in things that would create an imbalanced, dangerous, highly risky investment for the taxpayer and on behalf of the taxpayer. So just to sum up, sir, just to clarify for Mr. Lees-Galloway's benefit, the state is not managing the superannuation fund. The Guardians are managing this $29 billion fund. It's significant. It's important that we keep politicians of every colour away from the fund. It is important that we leave the independence to those who are capable and experienced in managing the fund. This legislation allows some increased flexibility to the FIVs to decrease costs, to save the taxpayer some dollars, so that the future generations are able to benefit from investments made today. Thank you, Mr. Speaker.
I call Stuart Nash.